Hello, everyone, and a very warm welcome to today's major markets update for Friday, August the 16th, 2024. Are we going to see 3 waves up or are we going to see 5 waves up? We don't know just yet, but the 5 waves sequence starts to become more likely, especially for the S&P 500. The Nasdaq 100, we're a little less certain about, and I'll show you in a moment why. Same for the semiconductors. Whereas for the Dow Jones, we're also missing a last wave to new all-time highs. We'll show you that in a moment. So while the S&P 500 and the Dow Jones could still make new all-time highs, the technology sector might not reach that. So please be aware of that potential. So we're going to go straight to the charts, and let's start here with the S&P 500. This is the hourly chart. So each candle is 65 minutes. Why 65 minutes? Because there is only 6.5 trading hours or something in a day. So with that, you get equal length for each candle. If you do truly an hourly candle, then the first candle that you get on the chart is only 30 minutes. So that's not the same. So here we have the leading diagonal wave A/1, and then we had our drop for B/2, and then we had 1 and 2 with this terribly low second wave. Would have liked to see it go to about 52.60 plus or minus 20. That's not what we got. Well, beggars can't be choosers. We don't make the markets. And I mean, that's not to wash our hands into innocence. This simply shows that we can't predict everything all the time. But remember, this B2 low, we nailed completely. So once in a while, we do get it correct. Once in a while, we don't get it correct in the sense of how much of a pullback we expect. And also remember, if this is indeed the C/3 wave in green, then pullbacks in that wave will often be quite shallow, more on a few hours instead of days, because the overall sentiment is bullish. So I have now elucidated the wave count better with all the price data that we have now at hand, and it looks like a 1 2 1 2 3 4. Today's low here was a 4, and then a 3, a 4, and a 5. I already made this chart late yesterday after I sent out the update, and so far it looks good. So far it still looks like a buy the dip environment until we get to the C/3. So the blue 4 has likely completed. The orange 3 is about to complete, so that would be a blue 5. Then we get a 4, a 5, a 4, and a 5. And as you can see, the 5 extension in orange nails the 161.8% extension pretty good. So that would be in orange 176.4%. The upper box edge is the 200% at about 56.50. The lower end is at about 56.15 plus or minus a couple. So this matches quite well. So it looks like we are indeed in this blue wave 5. Okay, so we're now starting to wrap up the final 4th and 5th wave. So I'd like to see this wave 5 go to ideally about 55.70 to about 5600. And then, of course, we get our pullback here for this wave 4. And then, of course, we get our next rally here for this wave 5 of 3, and then another pullback and then another rally. So this C/3 wave is definitely not completed. And then the market can decide if we're going to get a 4 and a 5. It wouldn't surprise me if we get the 4 and the 5. But after that, we've had 3 waves up, and then the market can decide if it wants to do a B, and then a C wave lower. Okay. And that is, of course, this is the impulse option, and we can go to new all-time highs. This doesn't have to be just a wave 1 of 5. It can also be all of wave 5. And then the alternative, of course, is that this is, let's see if I can find the chart there. Sorry, this is a little zoomed out. We're going to zoom in a little bit there, that this is the ABC wave count. Okay, so this is still very possible. And then the B wave has now extended beyond what is the normal initial retrace we're looking for, 50 to 76.4, and then of course we adapt accordingly. So this can still be like this. Okay, and then we're gonna go lower again in 5 waves, something along these lines. Okay, and then something like this. So this is then our alternative. This is 3 waves, right? 3 waves, and then 5 waves for a very protracted correction. It could even be a wave 4. But for now, shorter term, I prefer this to wrap up. It's wave 5 of 3, and then a 4, and then a 5, and then a 4, and then a 5. And from there, then we can decide if we see a 4 that must hold above key price levels or not. And I'm going to keep the same warning levels on the charts for now. So I like this. This is still a buy the dip environment until it doesn't work anymore. Very simple. If we look here at the weekly chart, where we count down weeks as correctives, we're still in this wave 13. Remember, we had 11 waves up and we're looking for 12 and the 13. Well, the 12 definitely went deeper than anticipated, but that's okay. From a wave count perspective, that matches really well. Because as we said, we are, of course, looking for this wave 4 here that could have been completed already at last week's low. Right there. So they have 1, 2, 1, 2, 3, 4, 3, question mark 4 and 5. If we start going to new all-time highs, it might be that all of this wave 5 already completes. Okay. Alternatively, of course, as I showed you, it is only a wave 1 of 5. I don't know where I had it. It is somewhere. Where did it go? But you know what I mean. So at 1, 2, 3, 4, 5, and that's wave 1 of 5, 2 of 5, 3, 4, 5, and then we go much, much, much higher. We'll deal with it when we get there. For now, again, the smaller waves do not suggest that the top is already in place, contingent on holding above key levels. But if you look here, we have such nice overlap on where this wave 5 of 3 is supposed to top and where the wave 3 is supposed to top, all that good stuff. Okay, so this matches really nice. So I prefer to stay bullish. Once we reach about 5660 plus or minus 20, it is time to become, in my own opinion, a little bit more cautious. Now, Jones, this was one of the wave counts we were tracking. We also had, of course, the countertrend rally, and that one was already invalidated yesterday by breaking, or sorry, on Wednesday by breaking above these lows here, the A wave. So again, I already thought that this was only 3 down and not an impulse, and that we simply had an A, a B, and a C, and that we're working on this wave 5 of a expanding ending diagonal in that sense. So far we have only had 2 down days since last Monday's low. So that's a 1, 2, 1, 2 setup. I don't even see the 3, all right, and the 4 at all. I don't have it on the map. Once we see a down day, then we can paint in the gray 3, gray 4. So then we should see something like this. This is now, of course, our preferred point of view until proven otherwise. And let me also make a chart for you where we are going to look at, of course, the bullish warning levels there. So we get a 4, okay, and then we get a 3 along this line. We get a 4, something like this. And then, of course, we get our 5. Right, this is what we're going to look for. On a bigger picture, this is the wave count pretty much since the 2020 low. And we have our 1, 2 setup, 3, 4. And we're now working on this wave 5. Okay, so this has been on the chart for a long time with an ideal target of 42,500 plus or minus 1,500. So we haven't reached it yet. And as you can see, this is the black wave 176.4 to 200% extension measured from the wave 2, as you can see. And the same here for this 1, 2, 3, 4, 5 path. And that's exactly what we're tracking. The daily chart, of course, shows a little bit different. It's okay. It depends on how you label things. Here I label it as a major 4, and here I label it as an intermediate 4. Yeah, okay. Potato in that sense. So it just depends on if you say, well, this is a cycle 4, and then this is a primary 1, primary 2, primary 3, primary 4, and this is, of course, major 1, major 2, major 3, major 4. Okay, again, potato, potato. I don't get too hung up on these wave labels as long as we're in the correct wave. And this looks like the 3, this is the 4, and now we're working on this wave 5, which should become that expanding ending diagonal. Maybe it's like a 1, 2, or 3, or 4, 5, something like that. The exact details are a little elusive because of the extreme overlap that we've had. So for now, I prefer to look higher, and let me see if I can quickly add, yes, the bullish warning levels are now on the chart here as well. We'll keep them the same. Okay, we'll just keep that the same for now. I don't think we should mess around with it too much. And this is, of course, then our wave count that we're looking for. And once again, we already broke above the 3rd warning level for the bears. And as you know, if this is a warship or a battleship, however you want to call it, then it had already a shot, not a shot across the bow. That already happened at 39,400. Neither did it get a radar lock at about 39,000. No, it had a direct hit. So one more hit, which is above, of course, 41,250, and the boat has sunk, meaning the bears have lost, and we are indeed in this wave 5, 5, 5, etc. Okay, and that's our preferred point of view until proven otherwise. What is otherwise? It is, of course, a break below yesterday's low. That's such a key breakout that we'll keep it for now. Today's low seems less important as yesterday's low. And then, of course, we'll keep the low at the Wednesday low because that was the day before the breakout, etc. So you can see really how we reason. And of course, the low here at 39,200 is a wave 2 low, etc. Okay, so for now, these are the bullish warning levels. And for now, things look good. We haven't broken below anyone. All right. That said, I'm still looking higher for 42,500 plus minus 1,500. And that should, fill itself in a nice impulse fashion. That's the path we're going to look for. Again, a down day, maybe on Monday or Tuesday, should be the gray wave 4. And from there, we expect more upside for a gray wave 5 to complete 3, 4, 5. All right, NASDAQ 100. So why do we think we have a wave 5 here? Because from the October 2022 low, we can count it well as 5 waves up. This is the leading diagonal wave 1. This is the expanded flat wave 2. And then a wave 1, a wave 2, a wave 3, a wave 4. And now this, of course, completes red wave 5, 4, 5. Okay, this is how we view it. And then we should have completed all of wave 5 at the top. Okay, that is why we believe that the NASDAQ 100 has put in a larger top and the SP 500 and the Dow Jones not yet. That's okay. Back in 2000, I believe it was the same thing. Some indexes top before others, and then the whole 2000 was a crash in technology, and the Dow Jones was actually a really bifurcated up and down market if you would look at that time frame from 2000 till 2003. So this does count like potentially all of 5 waves up. Could the black wave 5 with a question mark be 1 of a 5? For sure. This is then 2 of 5 for sure. That is all possible. I don't see another way of counting this for now. If you do, please let me know. 2, no more than 1. So here we have the top then, and that we're still in this B/2, but that we are subdividing higher, okay, and that we're still in a 5 waves C wave. Again, we haven't even reached the upside target of 19,900, which is 76.4% retrace. And it doesn't have to stall there. The C wave doesn't have to be 161.8. It can be 200%. 238, 261, whatever you want to make out of it, that we don't know beforehand. And we have, of course, here a big gap at about 20,100. So we can easily go all the way there. Okay, so we just reached the upside target for this wave C, and the wave B upside target has not even been reached, meaning that's 76.4% retrace is quite normal. So please keep that in mind. And again, we haven't broken below yesterday's low equal to the Dow Jones. We'll keep the warning levels for the bulls on the charts as is, and we can easily go higher. We can easily add another 400 to 500-600 points to it. For all I care, we can even add another 1,000 points to it. Okay, if we go above 20,700, we have to reassess our chart. Again, I have 0 signs the top is in place. 0. And this would then be, of course, the option that we have a not a top in place, but a new impulse higher. It's not our preferred point of view. It would match. It's simply a option. For now, I view it as less likely. Semiconductors, the same deal. The semiconductors erased the whole rally from April into July. That is often not a good sign. If it's a fourth wave, you do want to see it hold above the previous fourth wave and not retrace all of it completely. So on a bigger picture, right, we held critical levels, but this was a full retrace, and it does look like a decent impulse lower. Not necessarily, but so A1 is now complete. B2 should be underway, and that one can easily go to 5650 plus or minus 50. Okay, so I don't really have a solid upside target on the chart, but if you want, I can add that for you, and then you can see that we have still plenty of upside left in that sense. Okay, so normally this is where a B wave should go, but if it becomes irregular, and even irregular in a super cycle wave is fine. It can happen. Okay, it doesn't have to stay necessarily below that top. But again, you can see that, all right, well, we haven't even gone to the full extent of a 76.4% retrace. And let's see how we're doing on the C wave. Well, that one has extended a bit, as you can see. Right. I've labeled it as 1, 2. I'm simply counting the waves here. It's not necessarily a wave label, just as I counted the waves here as well as 11. Can count it as 13 as well. Depends all a little bit on how you want to do this. But again, I'm just tracking the waves here. So this was up, down, and then we're now again up, down, so to say. So it looks like we're subdividing higher. And again, as you can see, we can easily go to 55.50. Without any worry whatsoever. Again, I have zero signs a top is in place. So these are the warning levels for the bears. And let me see if I can also put, of course, the warning level for the bulls on the chart. So you got that as well. And if you're long this index, you know what to look for. And of course, the first warning level is the breakout level. The second one is, of course, the day before. The third one, we can move all the way, I would say, to here. And then, of course, the final one is right there. So these are the warning levels for the bulls, okay? Why do we have those? Because it means that if we start breaking below these levels, odds start to increase that the counter trend rally or the rally in general has completed. So below yesterday's low is a first warning. And then below, of course, Wednesday's low is the second warning. That's like first radar lock. And this is a shot across the bow. And then here we really got a hit. And if we get one more hit, then the boat will sink. Very simple. Okay. Those are the main indexes we are tracking. And then, of course, the AD line is making new all-time highs. That is not bearish. End of story. We already pointed it out on Wednesday that we had a strong uptrend. This is not bearish. End of story. If market breadth leads the market, it tells us that we're most likely going to view new highs on these indexes as well. And how we're doing on the McClellan oscillator, nice 54 reading. So a lot more issues on the SP 500 or stocks are advancing than declining. It's not yet a kickoff wave, which goes well above 100, but this looks pretty good. Why? Because our buy signal that we had a couple of days ago is confirmed, and we're breaking above this downtrend line. So I expect actually new all-time highs on the S&P 500 based on these technical indicators. Last but not least, our PMO buy all indicator gave a buy signal on Wednesday. Okay, so from the ideal bottoming zone. Excellent. This looks really good. Follow through yesterday. I have no data for today yet. Unfortunately, I can never share this in real time because this won't get updated till maybe 3, 4, or 5 in the afternoon, my time. So this is always delayed, but it just adds weight to the evidence that a new uptrend is indeed underway. Now, just waiting for the KST to give a buy signal as well. We don't have it yet. This is, of course, data from Thursday, but if we get it, you'll be the first to know on Monday, and then everybody else can be behind the fact. Okay, so very short term, this is the impulse we're looking for the S&P 500. I expect a similar path, of course, for the Nasdaq, etc. But potentially not as high because, of course, the Nasdaq is lagging. If you look at the S&P 500, it has already surpassed this bounce high here. If you look at the Nasdaq, it's just about there as well, but we still have more to go because the bounce here was much higher from a decline perspective versus the Nasdaq 100. Again, Nasdaq 100 can easily go much higher. I think it's still now a buy the dip environment. If you bought yesterday's dip, you did great. If you bought today's dip, which I did, you did great. So keep buying the dip till it doesn't work. That's pretty much what we're looking for right now. I have zero indication a top is in place below yesterday's low. If we open below that on Monday, then it was a first indication. That's a radar lock. Then we'll have to see if we're going to get higher prices or not. But then zero confirmation, that won't be happening until we actually break below the third warning level and really get a hit. That's the serious warning. Now, I don't advise you to sit through such big losses. But again, when you go long, of course, when things keep on going higher, you need to scale out and raise your stops. That's the best way to go about, not just sit and be a pig that eventually will get slaughtered. So again, no real surprises. If you actually look at my forecasts for the last few weeks, let's go to FX Empire, where I post. This is for the Nasdaq 100. So will we get the next leg lower soon, as I anticipate this rally to finish and wrap up its last fourth and fifth waves? So in July 5th, I already found that we should ideally top at 20,665 plus or minus 50. So the index peaked at 20,690 on July 10. Not too bad. And we then lost 15%. All right. Well, okay. While I was in Europe for family matters, then on August 1st, after I returned, I said that we should bottom ideally in the support zone of 18,200 to 400, and then rally to 19,300 to 800. Okay. Well, we bottomed, the index bottomed at 70,435. I was off by 4.2%. So I got the direction right, but the magnitude wrong. Okay, that's really it. Can happen. That's fine. But at least on August 5th, or I'm sorry, on August 1st, we're still looking lower at 18,200 to 400. Back then, the index was trading, I believe, somewhere in the 19,000. So that's pretty darn good forecast. So the scorecard over the last almost 2 months has been 2.5 out of 3 correct. Right, nailed the top. Didn't really exactly nail the bottom, but so we give it half a point. We got the magnitude correct, but or wrong, but we definitely got the correction path correct. And then we said we're going to rally from there to 19,300 to 800. Okay, for the Nasdaq 100. Where are we now? 19,500. So you must be mentally challenged if you think these were wrong calls, which some people think, but they just have either beef with me or with the other wave. But that's fine. Most people dismiss what they don't understand because they're just not willing to learn. I call that those limited mental capacity people, but that's okay. LMCP. You can always use it for somebody who you think is mentally challenged. And I don't mean people with Down syndrome, of course. I mean just people that don't want to accept that the edit wave works really well in forecasting where things can go. And this is not to say, oh, I always covered my ass and I'm always right. No, I got the magnitude wrong. And I'm admitting it here as well. I got the magnitude wrong, but I got the direction right. So that's good. Anyway, so 2 out of 3 correct. So that's why we're looking for this bounce. And we haven't even reached the upper end of the upside target. So of course I had a little bit lower upside target because I thought we would end a little bit higher. That's okay. We extended. So we can easily go higher again, and this is the option with the 3 waves lower. So just wanted to point out the Elliott wave can work really magic. As you can see here, this is more of a zoomed out view, and I think the Elliott wave works wonderful for a zoomed out view. The short term is always more variable. It takes a lot of 1-2s and 1-2s and smaller micro and nano waves to figure this all out. But on a bigger picture wise, it is very accurate. Again, it's nothing wrong with the Elliott wave. If we make a wrong forecast, it has to do with the forecaster, okay? Or as somebody once said, you know, it doesn't matter how smart the guesser is, or how many accolades the guesser has, or how many papers the guesser has, or researcher or scientist has published. As long as their guess is wrong, that's all there is to it. That's it, right? The rest doesn't matter. It's wrong. We admit we're wrong and we move on. And the beauty of the Elliott wave is that it's price based. Okay, we know that we have a limited set of patterns. For example, an impulse where 4 must stay above 1. And if that doesn't happen, then of course we are not in a impulse anymore, but then all we got was an ABC. We don't know it beforehand. That's why we place the 4 question mark and 5 question mark. I cannot predict the future. I have no crystal ball. I don't know if we're going to get a 4 or 5. But if we hold above key levels and then we start rallying, then we know that we have the 4 and the 5. Okay, that's all there is to it. For now, this is, I think, as reasonably accurate and high confidence that we will get the orange 4, orange 5, gray 4, gray 5, and then it's question mark 4 and 5, because we want to see 3 larger wave ups for a B wave, and we want to see 5 larger waves up for a completion of an impulse. That's all there is to it. It's very simple. I don't have to apologize that I don't know this, because nobody knows this. Okay, some people that say they do know, fantastic. Is it likely? Probably yes, you know, based on some other charts that we're seeing, that we still need the 5th wave, all that stuff, but we don't know yet. So we have to remain objective. That's the whole point. We cannot front run stuff about things we simply don't know. We just don't know it, so we have to accept it. Is it most likely? Yes, I would say so. But I wouldn't be surprised if we get this B wave, my friends, because if we get a B wave, it's going to drop. So with that drop, that would fit, of course, with a top here somewhere in the first week of September based on seasonality into October. Okay, so also the 4-5-4-5 sequence all the way to new all-time highs can be fitted in very well with a top somewhere in beginning of September, because that would give us 1 week, 2 week, about 3 more weeks to wrap all of this up. And it wouldn't surprise me if that's the case. And then we'll see again. But seasonality tells us to remain bullish. It said we should see a low August 4. That's been correct. And now continued rally into September. And we'll keep this roadmap for now contingent on holding above the key price levels. All right, I've talked way too much. Take care, trade safe. Hope you appreciated some of the explanations I gave about Elliott wave, how we view the markets, how far we can forecast the markets, what we can and cannot predict. And we're actually not predicting, we're forecasting. And that all we do is anticipate, monitor, and adjust. Okay, that's all there really is to it. And as long as you stay above key price levels or below key price levels, the patterns that we're tracking can, of course, develop and fill themselves in. Once we start breaking above or below those, then the pattern that we're tracking is falling apart and we have to move on to our alternative. Super simple. For now, I think we still can move higher based on the internal waves I'm seeing, contingent, of course, holding above these price levels, which are our stops or stop losses. And remember, never, ever hesitate to sell into strength. Take care, trade safe, have a great weekend, and I'll see you all next week.